Welcome back. North American stock markets are down so far this morning, but of course the context is they are very close to all-time highs. That is the same thing here in Canada, despite the political turmoil of yesterday. My next guest suggests the primary effect of Canadian political uncertainty is reflected in the Canadian dollar. Let's continue that conversation with Chhad Aul. He's Chief Investment Officer and Head of Multi-Asset Solutions at SLGI Asset Management. Thanks for coming in, Chhad.
Great to be here.
So let's talk about the Canadian dollar. It dipped yesterday. It's down again today. It has broken through 70 cents to the downside today. What is your call on the Canadian dollar, and is the uncertainty, which is a mild word, I think, to describe what's going on in Ottawa, is that the chief driver now, one of the chief drivers?
It's an additional driver, certainly,
right.
and it's interesting, as you said, that it's not mild uncertainty when it comes to the political picture, but the action in the Canadian dollar actually having recovered to almost flat yesterday kind of points to just how negative the sentiment has gotten and positioning in the Canadian dollar. So over the short term, there may be an opportunity for the Canadian dollar to bounce a little bit, but certainly the trend and the number of factors to the downside are building it. You've had a slower Canadian economy than in the U.S. Inflation we've already seen being more persistently lower in Canada than the U.S. as well. Policy rates heading in somewhat opposite directions, at least expectations. And now you have the political factors. Of course, you have the threat of tariffs. A lot of negativity priced into the Canadian dollar. And certainly any of those factors could continue to push it lower. But in the short term, I think sentiment is quite extreme. And if there's any resolution to the positive on any of those factors, you could see a little bit of a rally here.
There seems to be some uncertainty about the future of the Prime Minister, obviously. There is a new person in the job of Finance Minister. Now, the government did appoint a trusted veteran to step into that role. How are those things weighing on the dollar, if at all?
Again, I think these would typically be fairly negative. I think you would see an even larger reaction in the Canadian dollar. Just that uncertainty and the fact that, again, add to the fact that the fiscal policy and spending is one of the key concerns that's driving a lot of the political uncertainty. Again, more pressure on the Canadian dollar that I think you would see, but the fact that the negative sentiment is already there has provided a little bit more support than I would have perhaps otherwise expected.
There are, of course, pros and cons of a weaker domestic currency. One of the benefits is that our exported products become more attractively priced in foreign markets. How should we understand that as the prospect of tariffs arises with our main customer?
Exactly, and even outside of the political risk, just a slowing Canadian economy, one where the Bank of Canada is easing a little bit more quickly, certainly than the U.S. You get that weaker Canadian dollar, and again, that typically helps the export components of the Canadian economy. I think that still will be the case. Of course, from an investor's perspective, you've got to be a little bit careful, of course, around the threat of tariffs, which is a bit of a curveball through that normal prism where that weaker dollar would certainly help the economy through exports.
I'm interested in your view on equity markets in 2025. One of the big drivers in 2024 has been the expectation, which actually took root in late 2023, that the U.S. Fed was going to cut rates, and it has cut rates. Now, we, of course, have had the market dial back considerably the number of rate cuts and the magnitude of rate reduction in the United States. How should we be thinking about that in 2025?
And I think that will be a major theme in 2025, right? One of the things about monetary policy in general over the last couple of years is the direction has been clear. In 22, it was clear rates were going up. In 23, it was a pause and then a shift towards cutting this year. Now we're entering a phase where rates are going to be a lot more, and central bank policy will be more of a driver of volatility and a little bit of uncertainty here as we see central banks need to kind of test and learn where that terminal rate is. Where is the rate level that's going to be, kind of neutral to growth and also neutral to inflation. So I do expect that will be a source of volatility for equities as we enter 2025. Still expect generally a positive outcome for equities. I think growth is still relatively strong, particularly in the U.S. But again, I don't expect the lack of volatility that we've generally seen this year to continue into next year.
Everybody's watching earnings growth. Investors always are watching earnings growth. What is your call on S&P 500 earnings growth in 2025?
So I think that the key for what we've seen over the last few years is that earnings growth has been exceptionally narrow. A handful of stocks really within the Mag 7, even you could pick out a handful of the Mag 7, driving that earnings growth, also driving valuations higher. Our call into next year is that, lower earnings growth from the Mag 7. I mean, the comps year over year are just exceptionally high to try to
difficult
beat.
to live up
but
to.
we are expecting a broadening out, right? We're expecting that to broaden out into lesser loved parts of the market where valuations are also more supportive, and that should help drive further gains for the S&P 500 in a broader sense as well, which should be more healthy for the index.
And do you see smaller cap stocks continuing their rally, the Russell 2000?
Yeah, they've stepped back a little bit in the last couple of weeks, but I do think the small caps will be part of that breadth expansion story into next year.
Okay, well, let's bring it back to Canada. What do you expect in Canadian stocks in 2025?
So Canada it's going to be a very interesting picture for Canada. So of course, we always have a good number of sectors here in Canada that are globally exposed. So our resource sectors are definitely more geared towards what's going on in the global cycle. And there we like the fact that you get a little bit of an inflation hedge. Our base case is that inflation is heading lower. Anything that may be more persistent is likely due to some sort of spike in oil prices, for example. So you get a little bit of a hedge from that within your Canadian equity allocation. Beyond that, we do think, outside of the extreme threat of tariffs, we do think that a more dovish central bank here in Canada is going to support the Canadian economy and be able to drive some reasonable returns from those consumer-oriented parts of our market.
Chhad, thank